Next, we come to British pound, US dollar currency pair, and British pound is extremely vulnerable to the market's risk sentiment because of the British rather big current account deficit. And we can see that last week the pair was almost unchanged, but this week started with a decline, and we are currently trading below the support line, which connects post-Brexit minimums. And this looks like a very negative thing to me. Daily close below 1.2840 will be a signal to enter new short positions in British pound. One of the main sources of negative pressure on the UK currency are the expectations that Brexit may still hurt the UK economy. The UK Prime Minister confirmed that Brexit will be triggered before the end of March 2017. This is a rather close date. So the market now sees that the UK is really aims to exit the European Union, and this is a negative factor. It seems that the consolidation we saw on the weekly chart in GBP USD may finally be over, and we may finally see another leg to the downside. For such longer-term outlook, I would like to mention support levels at 1.2665 and 1.25. If we look at the daily chart, we can see that pivot support is located at 1.2840. This is already the second support, so the market moved rather actively to the downside on Monday. And the next levels to watch will be 1.2790, this is the post-Brexit minimum, and 1.2766. The economic figures from the UK haven't been bad last week. On the contrary, the GDP growth of the country for the second quarter was revised up from 0.6% to 0.7%. This week, Britain will release manufacturing, construction, and services PMIs, and will get manufacturing production on Friday. US labor market figures on Friday will also add to the pair's volatility. I would like to mention that the market still thinks that the Bank of England is likely to reduce interest rates in November, and unless UK PMI indexes, which are due on Monday, Tuesday, and Wednesday, show considerable improvement, the market will keep expecting the Bank of England to cut the benchmark rate, and we'll see lower levels of GBP USD. The first index, the first PMI, manufacturing PMI, turned out to be better than expected. However, the major part of the UK economy accounts for services sector, so data UK services PMI on Wednesday will be more important for further dynamics of the pair. And also, if concerns about Deutsche Bank and another German bank, Commerzbank, intensify, pound will feel its negative pressure and it will lose more versus the greenback. All in all, it seems to me that we should either sell the pound on its attempt to recover to 1.29 or sell the currency if there is a break below 1.2840 mark. Here, British pound looks negative. It has been looking negative for the several weeks, We saw that any attempts of pound to recover in September were shallow. We now stayed for some time at the lower border of this sideways range. We are now below the support line, and I believe there are enough reasons to believe that the further outlook for British pound is negative.